Have you ever wondered how the market behaves? It's like a living, breathing entity, unpredictable and volatile, always in a state of constant flux. It's a world where the only constant is change. Much like the weather, you can predict it, but you can never be completely sure. You see, the market has a knack for keeping us on our toes. One moment it's calm, the next it's a whirlwind of activity. And there's a saying that perfectly encapsulates this behavior. Give the market an inch more and it will usually take a mile. It means that the market, when given a little room to move, has a tendency to go much further than anticipated. This complex behavior makes the market a fascinating and challenging field. Understanding its movements and patterns can be the key to successful investing. Today we will delve deeper into the saying, give the market an inch more and it will usually take a mile. So, what does this phrase mean in simple terms? Well, let's dive right into it. The phrase, give the market an inch more and it will usually take a mile, paints a vivid picture of the volatile nature of financial markets. It's a metaphor that encapsulates the idea that markets, when given the slightest room to move, will often far exceed our expectations and boundaries we set. Now, imagine a scenario where you're investing or trading in the stock market. You set certain limits, right? These limits are known as stop losses, a predetermined point at which you decide to sell a stock to prevent further losses. But here's the catch. The market can be unpredictable, often moving in directions that defy our expectations. Let's say the price of a stock you've invested in starts to fall and it hits your stop loss. The natural instinct might be to move the stop loss further away, hoping the market will bounce back. You're essentially giving the market an inch more. But remember our phrase, give the market an inch and it will usually take a mile. Often the market doesn't bounce back. Instead, it continues to fall, leading to larger losses than initially anticipated. That extra inch you gave could turn into a mile-long fall. This is the danger of moving stop losses. It's a risky strategy that can amplify your losses. While it's tempting to hold on, hoping for a rebound, it's important to stick to the limits you've set. This disciplined approach ensures that your losses are capped and prevents you from spiraling into a vortex of mounting losses. So the next time you're tempted to move your stop loss further away, remember this phrase. It's a potent reminder that the market can and often will surpass our expectations, moving beyond the limits we set. And that, my friends, is the risk of giving the market that extra inch. Let's take a look at some real-life scenarios, shall we? Picture this. It's the dot-com bubble of the late 90s. Investors are pouring money into internet companies, expecting the upward trend to continue. Many moved their stop losses further away, hoping to ride the wave. However, when the bubble burst in the year 2000, it resulted in massive financial losses. Now, fast forward to the subprime mortgage crisis of 2008. Again, investors moved their stop losses, betting on the housing market's continuous growth. But when the market crashed, it led to a global financial crisis. Or take the more recent example of the pandemic-induced market crash in 2020. Investors who moved their stop losses away, hoping the market would bounce back quickly, faced substantial losses. As you can see, moving your stops further away can often lead to disastrous consequences. So, what have we learned today? We've delved into the concept of giving the market an inch more and it usually taking a mile, unraveling its implications in the world of investing. We've understood that this phrase is essentially a caution against moving your stop losses further away in hopes of the market turning around. It's a warning signal, reminding us of the potential pitfalls of letting optimism cloud our judgment. We've seen practical examples illustrating how this seemingly small action can lead to significant financial losses. We've also underscored the importance of setting stop losses, a crucial tool that helps us limit our losses and maintain our financial health in the unpredictable market. In conclusion, the key takeaway is to set your limits and stick to them. It's crucial to remember that the market is a beast that can run wild if given too much leeway. Remember, when you give the market an inch more, it will usually take a mile, so set your limits and stick to them. Happy investing!